It is May 18th, and you're on the Chinchilla Picking Podcast with Brandon and Nick Young, who's filling in for Dave today. What's he say? We want to be uplifting and
Entertaining, uplifting, and forgetting the last one.
educational. That's it.
Educational,
Educational. Yeah. All
uplifting.
right.
Yep.
Almost 200 shows into this, and still don't have it right, but that's okay.
Well, it's
Um,
not your half of it, so
it's not my half of it. I just sleep until he wakes me up and says, "Brandon, it's your turn." A lot of news this week, though. A lot of stuff happened. Trump, very busy man, and just absolute crazy turn of events. Change, a lot of changes, a lot of deals in the Middle East, a lot of deals with China. Um, Apollo Global has taken the possibility for a recession completely off the table. Um, Goldman Sachs lowered it from 45 to 35%, which I think honestly right now is still too high. I'm not 100% recession free right now from my end and my beliefs, but it's very small percentage now. We went from like, I was almost sure this was going to be a recession 2 weeks ago to I'm trying not to curse right now, but you and Dave were right, probably.
well, and honestly, I was actually one that believed it was going to be a recession going back, 3 or 4 years, and now where we're at, um, in relation to it, Brandon, I think the devil's in the details. The devil's in, like, they're saying, okay, we had a negative, and you guys talked about this in the show. We had a negative GDP, but why did we have a negative GDP? What caused that? And I think
Right.
once you get into the details, you can say we're not having a recession. Now, there are things that could happen. So I do believe there's a debt bubble out there. I do believe not really. That's not really a housing concern, but there is a debt bubble I think that could pop. That if that happened, I could see. I think we could see some concern. I'm interested to see how, like Dave talked about, the student loans,
Yeah.
kind of what happens there. So I think there's some room, but overall, I think the economy is fairly strong.
Yeah, and you know what's interesting, and what'll be crazy to see how we react to this, but I mean, I just was reading different Wall Street Journal headlines, and within 2 weeks of each other, there was one headline like 2, 3 weeks ago that said that imports have dropped. Los Angeles, head of the ports over there, the guy said that he didn't think that there'd be any increase in imports into the United States. And then just last week, there's a headline from Wall Street Journal saying that we're over capacity on our imports and that everybody's bringing it back in again. And I think that there's going to be a lot of industries kind of panicking maybe about the next 90 days because we got a 90-day expiration on this deal with China and they're going to be bringing in a lot of imports again and it's going to skew those GDP numbers again, so we may have another negative number at the end of this quarter, and the technical definition for a recession that some follow is two negative GDP numbers. But does that even really mean anything if the overall economy is actually growing?
Well, again, I think it comes back to the why is it negative?
Right.
So it may mean the formula needs to be adjusted. And I think that's what we're looking at
Yeah.
is the formula is not, I mean, the formula was being back in what, the 60s,
Yeah.
70s? So I think the formula needs to be tweaked a little bit. I think if we look at it, look into the details of it, why is it happening? Is it negative because of strong economic choices,
Right.
or is it negative because we are actually seeing consumers pull back? We are actually seeing people not buy. And that's where I mean, honestly, I expected it to be a more of a decrease because of how much government pullback from spending has happened. But that doesn't seem to be as big of a factor as I thought it would be.
Yeah, I could see that too, and I think that that's going to be actually like a long-term beneficial, and hopefully help with the deficit. I mean, and speaking of that, we just had the downgrade of the U.S. economy um, by the Moody's. The U.S. government debt was downgraded by Moody's at the end of the trading day on Friday. There might be a little bit of a reaction to that on Monday, but I'm not sure how much I care about that either, to be honest with you.
Yeah, and again, I kind of wonder what the downgrade is from. I saw that too, but I did not read the article. So that's one thing I got to go back and read to see why was it downgraded.
So essentially, I think there's 22 different, it was either 21 or 22 different grades that they have. And we had the very top for Moody's. They were
Was it AAA,
the
right?
best. Yeah, the
Yeah.
best of the best. And they just notched us down one. So, I mean, it's still like to them, it's safe. But it's just not as good as what it once was. And they said that it's government spending and less tax revenue, supposedly.
Interesting.
Yeah.
That'd be one to keep an eye on. Again, I don't really have a huge concern on that. I think there's a lot of fluff thrown in some of that stuff, so we'll have to see.
Yeah, there is. I mean, I don't expect at all that the US dollar is going to lose its reserve status because of it. That doesn't, I mean, people might panic and go in that direction, but I really doubt it. That I don't foresee that happening anytime in the near future.
Mhm.
Um, so, if that brings a pullback in the market, that's a buying opportunity for sure.
Well, and honestly, well, I think there is a huge buying opportunity out there. I think there was a pullback on Thursday and a pullback on Friday. I thought it was actually going to happen earlier, but I think it's the hangover from the huge run up we had on what Tuesday and Wednesday.
Right.
Um, so looking at that, I think there was a pullback, so it's kind of leveling the playing field. I think there's still a lot of buy options out there. One that I actually called last time I was on was American Airlines, which I had it, made some money on it, actually moved over to Delta, made some more money on that same kind of flow, and then actually bought back into it. So it's one that I'm actually keeping an eye on right now. I think there's a lot of growth in that sector. I think you might have said it or Dave said it. One of you guys did is fuel prices are dropping. So that's a
Yeah.
huge boom
Yeah.
to the travel industry. Another one that I called that I'm not in right now. I was in before, but again, with all the movement that we've seen over the past week, I traded probably more than I normally do. Is Carnival Cruise Line. I think
Okay.
that's one that I'm keeping an eye on. I think they have a lot of they didn't really get affected by Thursday and Friday.
Right.
They actually have been positive all through last week.
Okay.
So
So
they're
do
one
you
I'm keeping on.
so you still own Delta or
I had Delta. I actually had sold it and bought back into American Airlines.
okay.
Yeah.
Which I think is a good deal because I think a lot of businesses are going to start resuming travel again. They
Mhm.
paused it for a little bit on tariff uncertainty, and I think that's probably going to come back. Um, it just kind of shifted into a different direction here. I don't know if you want to talk about your subjects that
Oh,
you
go
have
ahead.
planned first. We just kind of got one of mine off the table. But other news that hit last week is company specific to Dick's Sporting Goods. And I just this full disclosure, I used to work there, and I've been bullish on Dick's Sporting Goods even after I left the company. So I'm not picking on them, but their decision to buy Foot Locker kind of is just I don't understand it. It's it's over my head right now. I'm trying to figure it out. Foot Locker's been they've been having trouble growing their top line in recent years. They've got a 0% CAGR since 2020 and even COVID, which when everybody ran out to go buy shoes and they had kind of a one-time earnings increase there, there's still a 0% compounded annual growth rate in 5 years for them. Um, I was looking at CFRA. They expect margins in FY26 to remain compressed and then maybe the operating margin to trend down even still. They've got significant exposure to malls. Malls have been on the decline, obviously. They got kind of a decent amount of financial flexibility, but their underlying business model and their ability to grow the top line without acquisitions or any significant investment is in question. Um, 2,490 primarily mall-based stores in 29 countries, mostly in the United States. They've got the same brands that Dick's already has. I mean, Dick's has kind of, their mindset to this. What they said is that this gives them access to international markets.
Well, I think there's two things. I think it takes a competitor off the table,
Yeah.
and I think Foot Locker has a more expanded inventory option, don't they?
I don't think it's that much more expanded though. I don't know, what their inventory looks like as far as,
I mean, a
other sneaker brands, but
Foot Locker is just shoes, whereas you
and
go into
yeah,
Dick's, at least in my experience, you usually have that one wall in the back where you have running shoes, basketball shoes. You have like, I don't know, four or five different types, both a male section, female section, all that.
yeah,
But um, in Foot Locker, I feel like you have the whole wall on both sides that runs back, and then you have some displays down the centers too. So I think you do get a lot more options
yeah,
with
it
Foot Locker,
is.
and I think maybe that's what they're capitalizing on is maybe we can take it out of the Dick's Sporting Goods, maybe expand Foot Locker into a couple locations and do that and get them wherever a Dick's is a Foot Locker kind of thing, maybe.
Yeah, maybe. It's just to me, I look at it and I see it's the same brands, and both of them lived and died on Nike for the most part. There's some Under Armour at Dick's Sporting Goods, and they have all the other different sneakers there too. I just, in my mind, I think it would have made more sense to open up standalone footwear stores rather than buy a company that's anchored to malls, which are dying, and to pay an 80%, I'm sorry, a 90% premium for the shares. They're paying $24 a share, which is 90% premium to where the share price was. Um, it just does not make much sense to me at all. I don't get it.
Maybe they'll break from stores or break from malls.
Maybe. I mean, again, I would want to see more standalone stores, but then again, does that go the way of Payless? Because I feel like standalone footwear stores haven't really done all that well historically.
Yeah, but Payless, I feel like the problem with Payless is when you went into one, it hadn't been updated since the 90s.
Right.
Whereas Foot
Yeah.
Locker, at least the product line, I feel like is more up to date.
Yeah. It,
So
it
I
is.
think that that'll keep them more relevant. But again, to your point, I don't think it makes sense to get away from malls. There, there's now one mall in Cincinnati that's actually fully active out of the four or five that were in
Yeah.
the area.
Yeah, it's Kenwood still,
hmm
right? I don't know if Eastgate still exists. I'm not sure.
I probably think it does, but again, it doesn't have the options that Kenwood does. I mean, you had Northgate, which is dying. You had Tri County, which is
It's
closed.
done.
Um, oh, what's the other one I'm thinking of? Not Eastgate. You mentioned. I think that's still open, but just has many options. And then you have I said Tri County. What's the other one? Right next to Tri
Northgate,
County
Tri-County. Um,
in
I don't.
Fairfield.
Yeah, Fairfield.
But there's that
Oh
mall
yeah, Forest
there.
Fair Mall.
Forest
Forest Fair
Fair.
Mall. You know,
So you got
I got a picture with Johnny Bench when I was a baby at Forest Fair Mall.
nice.
Yeah,
But all three of those, two of them are closed. One's probably not far from it. I mean, a lot of the stores are closed around the mall, but I mean, I think it's still in function. But yeah, it's kind of crazy. I would say from that model, it doesn't make sense for Foot Locker. But if their plan is to maybe move away from inside malls basically and either do standalone stores or uh oh what's the other up in Lebanon, the outlets, like an outlet kind of
yeah,
setup
an outlet
they
would
probably
work.
could pull off there, but if they try to keep the same model, I don't understand why they would have bought it. So yeah,
Right.
I'm with you on that.
Yeah, I don't get it at all. Forest Fair Mall, that was my first job was at Wilson's Leather.
I don't even think I remember that being in there.
It's a very small store. All leather items, obviously. Leather jackets, leather purses.
Actually, it'd be funny
Anyway,
if it wasn't just the name of it was Wilson's Leather and everything in there had nothing, like no leather in it at all. That'd be awesome.
Yeah. Foot Locker also owns Champs, which I don't care. It's I haven't seen a Champs in forever.
I think Champs is that the one I'm thinking of that's in the South?
But I think it is. I mean, it used to be in, there was a Foot Locker and then across was Champs. And I believe if I remember correctly, Champs had footwear, but then also a lot of like apparel items as well.
Yeah, I haven't seen a Champs in a long time to remember, but
Yeah, another
I didn't know they owned Champs.
I don't get it. I don't understand. To me, it seems like if Dick's Sporting Goods did this because they could. That's what it's getting a competitor off the market, I think, but it was kind of bravado. And shares reacted accordingly, I think, the way that they should have. They were down 14%. But I will be interested to see how they can turn things around for Foot Locker. And if those do, if that does wind up getting more market share into Dick's somehow, and if it does wind up adding to their earnings, I don't think it's going to. But hey, I guess time will tell. The other thing I kind of wanted to get into a little bit here, and I think this is going to surprise everybody on the podcast. 2 weeks ago, I bought into a treasury bond for the first time, and that was kind of ironic because I said bonds are dead. Tomorrow, I'm likely going to be putting some money into Boeing, and I'm not going to buy like normally if I go into a stock, I kind of build my shares. This one, I'm going to buy in a little bit tomorrow and I'm going to wait on. I'm not going to fill up, my portion of the portfolio with Boeing. I want to see what happens here because they've screwed up so much. But there are so many things lining up to be tailwinds for Boeing, and the stock's already up like 30, 40% or something like that, maybe even higher. Might even be like 60% from its lows. I think it was like 135. And now it's almost at 204, 205 right now. But I see a lot higher of an upside if they can start turning a profit, which they expect to do in the first quarter of fiscal year 26. Um, China now, and I'm just going to go through a list of the tailwinds here because there's a lot. China is allowing its airlines to take delivery of pre-existing Boeing jet orders, which they had paused during the height of the trade war. Airlines had returned Boeing jets from China because of the tariffs. They tied up hundreds of millions of dollars in revenue for Boeing. That stuff is now going to go. Boeing is a beneficial of the US UK trade deal. They secured a deal involving 32 new planes for British Airways, indications of potential more orders. And this is valued at around $10 billion. They're not going to face prosecution in connection with the two plane crashes that left 346 dead. They get a tentative deal with the Justice Department to not be prosecuted for it. They don't have to plead guilty, which they probably should have to. That sucks, but it's good for Boeing. President Trump announced deals in Qatar. That includes an agreement for Qatar Airways to buy 160 Boeing planes. This is a $96 billion agreement. That's a lot. That's just going to add to their back order. Um, Boeing's Q1 2025 earnings report showed mixed results. The company reported $19.5 billion in revenue. That was an 18% increase from the previous year. Still posted a net loss of $31 million, but that was a significant improvement from the $355 million loss from the year prior. So they're improving here. They're going to be profitable in the first quarter of fiscal year 2026. I think they're going to emerge a more lean company. They got a new CEO, and I think once they go profit, this thing can, pun intended, take off. Don't screw it up, Boeing. You got everything starting to go your way.
So I am I want to see more out of Boeing first. Um, so Boeing, I think something came out recently that there's the last administration had ordered two whatever 747s from Boeing, and their projection to have them completed by was 2035, something like
Yep.
that. Which why is it taking us 9 years to make two planes?
It takes them a very long time. The backlog that they have right now is 5 years of sales. So it's crazy. And you could say, that's a positive and a negative. That's a positive because they've got 5 years of sales almost guaranteed for
Assuming people don't come back and say, "Hey, you've taken too long. We don't want them anymore."
right, and also assuming there's not another, investigation into the 737 or into another, airplane that they make that says that, something's wrong.
Well, and yeah, I got mixed things on Boeing. I I had not noticed this was 130 like a month ago. Had I known that, I probably would have bought in at 130 just because of how far it dropped. But has so much it's jumped up now. Again, having crossed the 200 mark, I probably wouldn't buy into it,
Yeah.
but I understand where there's potential.
So you got to be careful to not try to shoot where the duck once was. And I think a lot of people look at Boeing and say, oh, it used to be 360, 370 a share. It should get back there. But we're dealing with a completely different company than what we
Uh,
were in 2018 prior to the two different, two crashes that happened. So,
Absolutely.
I mean, I wouldn't be aiming for that, but this is why I'm going into the stock, but I'm not going to do it to where it's going to kill my portfolio if this thing tanks again because they have been so unpredictable with the way they've screwed things up in the past.
Yep.
I don't want to wake up tomorrow and be in a bad mood. So,
Well, and again, they have to prove themselves. They have a lot to prove because they have lost so much good faith. I mean, Boeing used to be considered a staple. You could say you you could put Boeing on the same pedestal GE was.
right,
After the last 6 years, that's not you can't say the same thing.
right.
GE's still there. Actually, GE turned everything around. You've talked about it on this show quite a bit. GE turned it around. Boeing, again, you want to go on a pun, is crash landing. Now maybe they've made the turn. Maybe they're starting to make that edge where they've stabilized and they're making that climb back. But I am hesitant just because with them not being held accountable for the crash, they've had how many CEOs over the last 5 years?
Yeah.
There's clearly a culture issue, and then again, you come back and as you said, there's a 5 year backlog in sales. Something needs to be done there. Like we need to be getting a better turnaround, which again, I get it. It does take a bit to make a plane, but all the stuff they do, the helicopters, everything they get part, they're involved in, at some point people are just gonna be like, I don't want it anymore. And either you're going to be sitting on product. Yes, for depending on the product type, you can move stuff up for certain customers. So again, like the China situation, hey, we built these planes, China doesn't want them. Okay, fine. We'll go ahead and move them up to orders for other people who had that plane, but we're going to get it later on. Now they're just going to get those early. But not all their business lines can do that.
Well, and see, here's the thing. They said that they were going to sell those planes and they had a deal with somebody else. And now that China has came back and said, never mind, we're going to buy them, Boeing said, oh, surprise, we still have them. You can have them. We didn't sell them to anybody else. So
That's weird.
apparently there wasn't really another deal. So that kind of adds to my frustration a little bit too. But you
Well,
said
I,
you had
I
somebody
wonder if
else
they
bump it.
sat on it. I wonder if they sat waiting because they assumed something was going to change.
I mean, that's possible. That's absolutely possible. And I mean, this deal with Qatar, I mean, they usually, if two governments make a deal, there's like a 10 to 20% discount on these planes. There's no discount. Qatar's paying full price. So, I mean, a lot's happened in the last week that nobody expected that has completely changed the way everybody views this market. Now, I wouldn't be surprised if that there's some sort of, give back of the gains that we had. People start looking and say, well, tariffs are still a little bit higher than what they once were. Um, and, we got the downgrade of the US credit rating by Moody's. Again, it's a buying opportunity, in my opinion. I think I'm almost certain that there's not going to be a recession. Now,
Well, and even on that, I think here's what I'd say with that downgrade from Moody's that I didn't mention earlier. You mentioned it's probably going to affect us on Monday,
yeah,
which It very likely will. But again, as you mentioned, it's going to be a buying opportunity. Let Monday happen, wait till about lunch. And then at lunch, right after, you're probably going to see stuff start to recover.
Right.
So somewhere between 11 and 1, if you're buying, you're already going to recover your 5-10%, or you're going to make 5 or 10% that day.
Right. Also, part of this Qatar Airways deal, they made a deal for General Electric, GE, for more than 400 engines, that's 60 GE9X and 260 Gen X engines. So GE also a part of this deal. GE Aerospace continuing to make gains and just continuously surprising me, even as a shareholder. And I think that you should own GE Aerospace. I also think you should own GE Vernova. So,
Yeah, I'm not in either right now. Actually, ironically, I was in GE before they did the reverse split. What was that? 2018, 2019?
right. Well, they did the reverse split. I think it went into effect in like 2020, late 2021, early 2022 is when that started.
Yeah.
But 2018, that's when Larry Culp came back
Hmm?
and
Yeah, because
started
I
to turn things around.
but I didn't hold I sold after the reverse split, and then they split the companies and it took off, and I'm like, man,
Right.
if only I had held on another year or two, because I think I had had it for 2 years at that point, and I was like, all right, we haven't seen much. I'm going to go ahead and cut GE loose, and I wish I hadn't, but it is what it is.
It took a while. It took a while. I mean, and there were more declines that came. I think it went from like $75 a share down to $56 at one point.
Uh-huh.
And if I ever have any kids, that's what my kid's going to be doing. 18 years from now, they're going to be like, "Hey, Dad, tell me more about that time you bought GE for $56 a share." I'm just
Where,
kidding.
where were you when?
Right. Because that's such a cool story to tell for nerds, at least. But
Hey, that's what we do. That's the point of this podcast.
I think that GE Vernova, I think right now you look at it, it's got like a multiple of like 50, which seems super high. But if you think about the electricity that we're going to have here in the United States, the updates that we're going to have to the grid for artificial intelligence, for all of the data centers that are going to be built, um, electrification of cars, all of that stuff, it's going to happen here in the United States. Right now, 80%, for example, 80% of the metals mined for lithium are done in China.
Huh?
So, not just looking at GE Vernova, also kind of looking at Albemarle is a company, I think, here in the United States that drills or that mines for lithium. Rio Tinto is global. I don't think they have any lithium mines here in the United States, but they're the largest globally. Those are companies that I think at least deserve to be on your watch list right now. And GE Vernova right now, with at least a foot in the door of investing into something called fission and energy,
Huh?
which is, have you heard of it?
I recently I heard about them, but I actually don't. Are they in nuclear energy?
Yes, it's a nuclear energy, and to be honest with you, I don't know much about the science, but um, it produces essentially energy in the way that the sun produces energy. And the theory is that they can use fission energy to continuously produce energy and it not run out.
Are they the ones that are building the mini reactors?
So GE Vernova's doing that, but then there's another company for last week. I forget the name of the company that reported earnings, and they don't have a product yet. So they've got like a patent for those mini reactors. They're supposed to be produced, I think, in the year 2030. I
Okay,
cannot remember the name of that company, but I'm not. I listened to it. I heard about that, and I didn't buy it because I don't want to buy something that won't have a product until 2030. But it might be something if you can find out what it was. Like it's something like SMS or something like that.
but GE Vernova, so well, any company in that regard is going to be big because right now with AI and the development of all that, there's a couple industries that are going to work really well together. So you've got Meta and all that, which I know you're a big Meta fan. And then you've got the energy industry, and you've got, um, I mean, basically kind of the supporters. So, like Cooler's example, all of those are going to do really well because the energy grid right now cannot support the servers necessary
Right.
to actually create or maintain AI. So they're going to actually they've allowed all these organizations, Alphabet, Meta, I don't know about Tesla because I guess it wouldn't really be Tesla, but they're basically giving them permission to build their own nuclear reactors to support their servers.
Wow.
So with that, now granted, again, they're not going to get it done in the next year. This is going to be something that's going to be
Right.
cascading for years. So there's opportunities out there in GE Vernova, and as Meta is able to expand what they can do, what their AI can do. So there's if you're looking long term, I think those are two that'll be really interesting. Vernova, uh, Meta, and then another one that Dave's talked on here, I've talked on here about before, is Cooler. I think Cooler is going to have some opportunity. I'm a little hesitant after their earnings call they had last Thursday
Yeah.
because they seem very heavily in Bitcoin, which I get, but I want to hear a little bit more about what they're doing as a business. They lean very heavily on the Bitcoin front, and I want to hear more what they're doing as a company front. And I think long term we'll see stuff. They have a contract with Nvidia, I believe, and then they do have a patent for those miniature nuclear reactors to get them to be. From what I understood on it, is basically to keep a cooler temp so that you can produce more energy.
Mhm.
So there's something there. I mean, but basically those are three companies I think if you're looking long term, 5-10 years, are definitely good ones to invest into.
Right. GE Vernova and Cooler. GE maybe being the more safer one, Cooler being more, risk, but also more potential for growth.
Absolutely. I mean, 100% it's still risk.
Right. So that's all I had to go in on my side. So we can go into your topics.
Well, we kind of winged him in. So I mean, the
Yep.
ones that I really like, there's one that I wanted to talk about, and Dave's mentioned it. Is there's one retail company that I'm really shocked did not take off from that 90-day pause.
Walmart.
Walmart,
Yeah.
which again, their earnings call wasn't great, but I think it's going to be one to keep an eye on. And again, if you're looking long term, 5-10 years, it's going to be a really good buy.
Right. They'll grow into it. The fact of the matter is people were kind of zeroing in on Walmart saying that they were going to have to raise prices even with the current tariff levels. Walmart is not going to raise prices unless they think they can.
Pretty much.
So obviously they think they can. So to me, I kind of saw that as a two-edged sword. They believe their consumers can keep up with the price increases. Otherwise, they would be eating the tariffs.
Well, and how much of an increase is it really? So
Don't even know yet.
if you have a 5% increase, and you lose, I don't know, a handful of customers, that's a win for Walmart.
Right.
If you lose 25%, that's a bigger issue. I don't see you losing 25%. I mean, you still have a huge gap between Walmart and their competitors from a price standpoint. The only one that can really compete with them is Amazon, and at least from a price perspective. But again, Walmart, I feel like is such a staple that it's not going anywhere and it's going to continue going up.
Yeah, and they even said on the conference call that their guidance, I mean, there's about 20 different ways it can go. And they've got people like Dave was talking on the podcast last week. If he owned $1 billion company, he would have a team of experts looking at the different options. And Walmart has that. And so they kind of gave out different ways that things could go based on if tariffs get worse, if they get better, or if they stay the same. And I honestly, I'm still bullish on Walmart. It's a little low, maybe that price to earnings ratio of 40 is what scared people away. I don't know. But I would say it's still fairly valued. I think it's going to grow into that. Um, it was a solid first quarter for sure. It was a solid first quarter. Um, and again, the fact that they're able to raise prices and they don't think that they're going to lose a large amount of market share, which they've gained a lot from Target and they've even grabbed some from Costco.
But
So,
even if they do increase prices, you know what they can do is just bring in the rollback. Just bring the rollback back.
Right. Bring that smiley face back
Uh-huh.
and yeah,
And
roll
then
them
all of a
down
sudden, now you
prices.
got a sale, and you have how many customers that are going to come back in because now you've got a sale for the rollback aspect, and you win either way. So
Yeah.
Walmart, I again, I feel really good about. I would say right now, based on what it's priced, I would not be surprised if it hit 120 by the end of the year.
I wouldn't, yeah, that wouldn't surprise me either. I like Walmart and I still like Nvidia. Similar reasons, actually, even though it's two completely different companies, because even if we did have a recession, even if things went downhill, then all of a sudden unit economics matter even more than what they used to. And instead of paying people for labor, they're going to go more into artificial intelligence, which is going to be the answer to cost cutting. So Nvidia wins either way as well.
Well, and I think there are actually, I read something they're going to start a new line of chips for China,
Yeah.
kind of where they talked about where the administration had mentioned, hey, we don't want you selling the same chips to China. So they said, okay, we'll put them at 40% of the power of what we're selling to the United States. Okay, cool. Then they came out and were like, we'll create a different line that just doesn't have the abilities as the other chips that we're selling. I'm positive on Nvidia. I'm not buying just yet because I think they're going to probably run into something like Monday. They might bring them down, and then will be a buying opportunity to ride the coattails of that.
Well, they just announced a large research and development plant, I believe, for China again. So that might come under pressure. We'll see.
I don't think I heard of that.
Yeah, I believe it was in China, and I think they've got another one in Singapore coming up. Um, but yeah, so that there might be some resistance from the Trump administration on that. Um, but again, we'll see. Now things seem to be kind of on the right track, hopefully, with China and with these trade deals. A lot was announced over the last week. I mean, it caught me off guard. Maybe it didn't catch you and Dave off guard, but it caught me off guard for sure. Um, I wasn't expecting that much of a turnaround that quickly. Uh, but again, we'll see. I think valuation metrics come into play next week. Palantir might have a little bit of a rollback. I think you buy on that too. I know that's incredibly expensive stock, but I think it deserves it. I think Nvidia's long-term growth potential is there. So I'm actually pretty excited now about stocks, even though I don't have anything necessarily right now that is screaming at me buy. I think you can look at Rio Tinto, GE Vernova. If you don't have exposure to those, add those. Um, and I don't want to say it's smooth sailing from here, but it's certainly looking a lot better than it was this time last week.
No, absolutely. Yeah, I think for my thought, I'd have American Airlines, Carnival Cruise Line, Walmart, all good buys. Especially, they're all good long term and could be good short term too.
Okay, awesome. Did we cover everything from your end?
I think we did, yeah.
Awesome. Okay. Hope we were educated, educational, uplifting, and
And everyone
entertaining.
makes money.
And yeah, hope everybody makes money. Man, if you're listening to us and you're not making money, what's wrong with you? I'm just
Well,
kidding.
actually, one thing real quick. Didn't you do something in verse of Jim Cramer?
I did. So last week I bought Calmaine Foods, and I wound up selling it on Friday. So I'm glad you brought that up because I knew do need to bring that up on the show. I wound up making about 8% on the trade. It's my first swing trade that I've had in over a year at least. And even if you're still holding it, the balance sheet to me looks fine. The one-time price increase in eggs that we had, a year ago, that's what skewed this stock to look as cheap as it does. I still think it's cheap, but I want to see where we're at, I would say 6 to 9 months from now, once things are back to normal again with the price of eggs, and once we're able to price that in, where's the valuation at that point in time? Because that was such a one-time deal with the increase in earnings, it made it a little bit too unpredictable. So the yield this time last week was 7%. It's a little bit lower than that now because the stock increased. I made the 8%. I just decided to get out and take my wins. So,
Hey, take your wins when you can.
yep, I agree. All right, everybody have a good night.
Take care.
See ya.